Okay, so this is the second video. Good evening. I'm Giuseppe Basile. I'm the NSN trader. You can find at the website www.fibstalker.com. I also post regularly on Twitter on the @fibstalker nickname. Good evening. This is the second video of my free newsletter, Fibstalker Weekly Review, that I provide to all my free newsletter subscribers. So if you want to get this newsletter, just subscribe for free on my website. Only for this weekend I'm going to provide these videos also on my blog, and the reason for that is I want to showcase my my analysis in advance of tomorrow's webinar on fxtrade.com, where I will talk about the traditional uses of Fibonacci retracements versus the uses that allow to actually frame, price, and understand what program trading is doing in the market. So if you're interested, I think it's going to give you a different perspective on the markets, and yet another tool you can use and you can actually use to complement and improve technical analysis. Your technical analysis methods that you use on the market. So if you're interested, please register for the webinar. I'll be happy to see you there. In this second video, I'm going to review for you the three Japanese majors: the US dollar versus Japanese yen, the euro versus Japanese yen, and the pound versus Japanese yen. So let's start from the US dollar versus Japanese yen. I want to start from the weekly time frame here, where you see already a trace, but I want to show you the sequence of measure move that brought us to trace that level. And when we go back to last year, March, end of March, we had the highs and an extension, highs to highs here, and I traced this with almost 1 month in advance here in April last year. You can review my videos, and we saw participation right at that 195-94 level that we identified before, and there was then a sequence of measure move that were broken. Shorts were not able to continue moving this market lower, and understandably because of this participation on the long side. But the same thing happened to longs here, and only when at some point this 97-70 area started to work, this area became an area of support here, and eventually was able to bring price into previous size and even higher. And then when we trace the next measure move here, which is a weekly measure move, and we saw multiple times participation at this 101.53, which is the start of this area of support. So when we go to the daily time frame, and we see this level in a better much more detailed here. Let me trace it again. I just want to be more precise here, and as you can see, the 101.50 area was tested a number of times. It's being retested at the moment. So those who follow may know that last week I've traced this measure move short here, and when you apply the fib stalking technique to this area of shorts or long, and there's a violation of the sequence of measure move in the 15 minutes, that becomes a very good trade. And I believe this was a 2.8 reward to risk trade here, if you took profit at this 101.58, 101.53 level. So what is happening at the moment? Let's see on the 15 minutes time frame. We had and actually let me take the opportunity to show you the behavior of the market price when price got into this area of resistance. That's exactly the same area of resistance I showed you just a minute ago on the 15 minutes on the daily time frame. This is the 15 minutes, and when we apply the fib stalking technique, we have from lows to highs here, and price gets into first and second target. So it's now trading on the 15 minutes chart in extension. So we actually trace from highs to highs, and we see that when price gets below this 102.15, then that's the signal for an entry short with a stop above highs, and that's exactly what would have brought you probably a 2.8 reward to risk trade here. Now we do the same on top of support here. So when we study this price, we can see here that although there was a marginal stop that the market continued, a marginal pierce of the stop that the market actually continued lower and actually started respecting this area of resistance. So we can do this kind of consideration because the market is still away from support, but when we are close to support, we consider these areas in a stricter way. So as you can see here, this market is still moving lower, and you could make the case that this level has traded 101.66, 101.70, so it's 4 pips. So I'll assume this has traded, and so the longs will be confirmed only if price gets above 101.80 here, and that's what I'm looking for in this market. Moving to the euro versus the Japanese yen, then we start again and we give a look at the daily first, and as we can see, the 139.27 has failed, and this is a very important development here on Thursday. That was on Thursday last week. That suggests that some people will look at this previous low here, but this previous low really is not really very important. I mean, we need to look at what market is what market price is doing, and actually we know that with that violation we just before saw, there is now the potential for this market to trade into 137.74, and we don't know how this is going to play out. If this market retraces, there are a number of possibilities that we have to keep in mind. The market could retrace into the all the way halfway back here, 140.61, but the market could also actually retrace, have a much shallower retrace here, so we don't know that. And those who tell you that they know where the market can retrace, well, I only see and consider what program trading is doing, and actually I only look at objective moves. Here there are previous lows, and some people will say that this area is more probable than this area, but in reality, again, we don't know that. So what we have to do, if this market continues high, we are going to study the sequence of measure move, the Fib stalking technique, with the Fib stalking technique, and see whether we have the violation of the sequence in this area or in this area. So there is no need to guess in these markets with actually a very good volume participation, because the market itself will tell us when we have to get involved. What we know is that this 136.74 area now can be retested, so this is a good opportunity to get a short in the euro versus Japanese yen, and we will see when that happens, where that happens. If you are asking yourself where this 136.74 comes from, then we have to go back to the weekly time frame, and again I'm gonna show you how I derived this value and this area that participated quite well to the participated quite well. As you can see here, when we trace from highs to highs, we had participation at this 119.57.60 level here. So the next measured move from highs to highs in this extension was actually the area where market participated. Now this market confirmed this 136.70, but now apparently confirmed also a retest of this level. So let's see what happens when the market will get there. Moving to the pound versus Japanese yen here, again on the weekly time frame, let me show you how we got to the current level of support. This is slightly different in this market because we had initially this extension long, which initially did not hold, but then it held, but then the market came to test again a traditional measure move here before it started moving again in extensions. And the 147.35 broke price into 161.26 and 168.47, and then the next measure move actually was respected by price from highs to highs. We can see that although this area was challenged, the low, the stop at 163.62 was never hit here. So this market is actually still in a sequence of measure move long, extension long on the weekly time frame. And when we go to the daily time frame here, there are some level, there is an important area of support here, 168.72, and on top of that there are other areas of support, lows to highs. We had price piercing 169.81 here on the downside first, but then this level is now holding. So this measure move here from so when we zoom out here into the daily time frame, we could make the case that you know, there was a previous measure move here, and it actually hit first target, then hit this area of support here, but there might be another level that we have to consider, which is coming either from highs to lows, or it could be even lower in this specific case if we follow the rule. So again, I mean, we don't have to guess, because we can use the fib stalking technique to tell us when this sequence of measure move fails. And when we go to the 15 minutes, which is what you see on the screen here, we can actually follow this sequence quite nicely here, because as you can see, this market is moving in extension in traditional longs here. The next target is 170, 117, and this could continue higher. And when this sequence of measure move fails, we will have identified the stop, and we will see whether this market is going to reverse or continue higher. So if the sequence of measure move fails, there is a reversal, and maybe there is the possibility to break this level and go on to retest 168.70 area here. I hope this video is useful. As I told you before, this video is going to be published on the on my blog as well today. This video is usually only reserved for people who subscribe my newsletter, so if you are interested, just go to my website, and on the left side you can subscribe for free. I actually respect your privacy. I hate spam as much as you do. I subscribe other newsletters myself, and you are always in control. You can if you're not interested, you can unsubscribe at any time. So thank you very much for your attention. Thanks for sticking around. If you are interested to tomorrow's webinar on fstreet.com is going to be on a comparison between the traditional uses of Fibonacci traces and the Fib Stalker methods, specifically methods that use Fibonacci to frame price and study the effects of program trading on price. Program trading is an important class of algorithmic trading, and can give you an edge in the modern markets. Thank you again, and have a great evening and a great trading day. And for those who are from Canada, have a happy Victoria Day tomorrow. Bye bye now.